Hi guys, welcome back. Okay, let's go straight to the point. I think we're in the middle of a golden opportunity here. For HSI, for Chinese stocks, this kind of fall only happen about once in every decade. For the Hang Seng Index, in the past few decades, every time it backtests this yellow trend line, it's the golden opportunity. It happened in dot-com bubble, the US housing crisis, the US-China war, and COVID crash. So this happens once in a decade, once in 10 years, only a few times in a lifetime. So I don't know what we're hesitating for, but just buy like a beast. That's what I've been doing myself. I've been adding to my existing positions and opening up new positions. This is where you can almost just close your eyes and accumulate the shares of the companies you like, gradually whenever there's a dip. For the housing crisis, it tested this trend line first and then had a nice rebound for 48%. And then make a double bottom by backtesting again the next year. Last year in March, it tested this trend line again, also 48% rebound, until the beginning of the year got rejected by the medium trend line. Same thing here. Coming back down probably also would be making a double bottom. It may or may not backtest the trend line again, but we are already very close. So I don't think we need to wait for that moment exactly, because it may or may not happen. So if history is forming a pattern, then what happened back then is gonna happen again, like this, breaking out. So the medium-term target is to test the trend line again, and the long-term target is much more than that. It is not only to pass the previous high in 2007 and 2018, but at least testing the upper trend again. Bull case at least 46,000. And of course, that's a variable thesis. Again, China might pass the GDP of US by the year of 2026. So that's 5 years from now, and stock market usually priced in earlier, in advance. And don't forget, right now we are marking the big transformation for the Chinese financial market. It was never the focus before, and now it is. More and more mutual fund and pension fund would be tied to the financial market, and this had never happened before. Young people are getting more and more interested into investing in stock market, and this is also a massive trend happening. So the next time to break out for the long term, expect it to be much higher. Remember this from my last video, the stock market psychology. Right now there are some stocks that have been growing non-stop, getting into more FOMO and euphoria stage. When stocks do that, they usually would get into the stage where people forget completely about the valuation. And that's usually when things collapse or get into longer term correction. And at the same time, when a stock constantly drops, it can drop for a while until people completely forget about the valuation, the fact that it is extremely oversold and way below the fair valuation. So when they forget about that, people tend to cut loss, believing that it's gonna keep dropping. That's getting into the desperation mode, where people just close their eyes and dump all the shares without looking at the price. Kind of sell it and move on. That's a market signal we would be looking for. I often said, watch out for my channel's comments. Read the discussion in the Discord. Monitor the market sentiment. Watch out for this important signal. This kind of dip does not happen more than a few times in our life, but when you look back, it always looks so obvious. Why wouldn't anyone buy at that point, right? But when it happened to you, you will see how it's not that easy at all. There is a lot of psychology to fight. Right now, it's mainly about psychology. It's detached from the fundamental long time ago. If you want to win, you gotta win with psychology. Most people are freaking out about the Evergrande crisis and got really afraid of regulation because of the education sector. So I'll explain more my point of view. For the last few decades, China's GDP growth had been very fast, on fire, and a huge chunk of that comes from real estate sector. It was very important to the China growth in terms of saving for every household family. Real estate would take up the majority of that saving. So people don't spend a lot of money, and for everything they try to invest with it, and mostly goes to real estate investment. And for the money they actually spend, a big chunk of it goes to the education. So now these two sectors are down. People believe it's the end of the China growth story. For the Evergrande crisis, so I suggest you to take a look at my previous video. where I try to connect the dots with a few things happening. And I gave a metaphor of the US QE is acting like a sun, while companies like Evergrande is like those energy storage, those solar panel for energy storage to absorb the energy, the money flowing out from the massive money printing. So I think China is purposely taking advantage of the QE like this to solve the internal problem that they have wanted to solve for a long time. Everyone knows the Chinese housing bubble and the US stock market bubble are the two biggest bubbles in the world. Everyone is afraid the moment the bubble pops, it will trigger a huge financial crisis. So what China is doing right now is actually poking the smallest little hole possible to slowly, steadily unleash those air inside the bubble instead of letting the balloon pop all at once and create much bigger problem. So that's why as long as I see that they're doing it on purpose, then I wouldn't be too much worried about it because everything to me seems planned ahead of time. So I'm just gonna go with the flow and probably pop some popcorn to see what's gonna happen. Worst case scenario, Evergrande had lots of property on hand, so much asset that can be converted to cash. So I think the media is blowing it up to make it more scary than it should be. So letting air comes out slowly to prevent the balloon to pop, and I do not think that it's gonna collapse like a free fall because the bubble mainly happened in the first tier city, the developed area, and as long as those cities still have migration to move into the city, the population would continue to grow there, and with the amount of time, I think the valuation can adjust with the natural demand to increase. So at most, maybe the real estate sector is not attractive to invest as the last few decades, but it doesn't mean it would be collapsing like a free fall. I think the government would try to control that. Plus, there is opportunity in every crisis in the world. It just depends if you can see it and grab it. I think what's happening for real is that China is under a huge transformation right now, from the old economy to the new economy. Sure, maybe the real estate would start to take less and less portion of the GDP, but that would mean at the same time there will be more portions, more shares, more focus, more resources to be put in the other sector like the new energy, the EV, the new technology, the chip, the high-end manufacturing. So in the past, a lot of the money investment were put into the real estate and would now start to be distributed into the other sector, especially the new energy, while the carbon neutrality would be the main focus for the next coming decade. And this is matching 100% with what I'm seeing in China, what's happening around us. I'll give you an example. One of my clients, it's an aluminum company. They provide aluminum for real estate, commercial estate, to not only the biggest developer in China, but also the whole world. Many of the top buildings in the world were built with their aluminum. So they're one of the top companies in China, famous in the field of construction or infrastructure. So they have been doing this for 30 to 40 years. It brought them great fortune. But it's only recently they started to shift focus and invest more time and capital into the EV. They are producing aluminum to make the chassis structure for electric cars. So this is a good example from old economy to the new economy that's happening around me. It matches with my belief of the China economy shifting, making a huge transformation, while the real estate may not grow as fast as what we have seen in the past. So in every household, the majority of the saving goes to real estate, and a big portion of the consumer spending goes to education. Now these two sectors are in regulations. This would actually create a lot of other opportunities. When a window is shut, there is a door open. We will see more and more saving goes to financial investment, like stock market. And we will see more money goes to the other consumers' spending. That would help the boost of retail sector. There will be opportunities in the retail section. Focus on the retail brands that can target well to the millennials, post-90, post-95, post-2000, and also domestic brands, because the Chinese culture and the patriotism would go stronger and stronger. Look at the coffee trend, look at the cosmetic trend, sportswear, high-end fashion, designer goods, and so on. This is the original 30 companies that were included in the Dow Jones when it started. See if any of these are still inside the Dow Jones anymore. The last one that survived was the GE, which were kicked out recently as well. The giant Chrysler were down by the financial crisis 10 years ago. That was the crisis for the old giant, which was also the time that marked the success and rise of new giants like Amazon and Apple. In every decade, there would be sunset industries, just like there would be sunrise industries. While the real estate or education sector, the old economy is under regulation, getting into correction. At the same time, there will be other giants rising that will take the lead to make the next bull run for the next decade. The growth of CATL, the battery giant, is marking the significant transition into the new energy. As long as these new giants are still up and running, the other smaller players like NIO, Xiaopeng, even BYD, Geely would likely follow. So I think it's more like a natural cycle, but the Chinese regulation is just speeding things up because speed means everything to China, right? That's why throughout this period, I just keep on saying accumulate the shares. Didn't even need to look too much at the price when it was at the 30s. Other than the new energy and also Xiaopeng, I make video on Geely. I've mentioned several times BYD and also JKS. The EV and solar sectors are getting into a hardcore demand for the next decade. So fundamental-wise, there's almost nothing to worry about. Other than the new energy sector, the current fang of the Chinese stocks like Tencent, Alibaba, Meituan, JD, Baidu, PDD. All of these are extremely oversold. The valuation has been detached from the company's fundamentals. So most of what I've just mentioned, they are in the buy range. And there are more, of course, and I won't list all of them. Now, let's move to more questions on the Discord. Many people are asking, what will happen if the US stock market gets into a correction? My last video also addressed some of that. If the US market starts to crash, of course, everything would start to crash. But the good thing is, HSI and Chinese stocks have been falling for a long time, so they would have limited room to drop. Maybe a final dip and then move on while the US hot stocks would continue to make lower lows. So I believe the Chinese government has spent almost a year to try to get detached from the US stock bubble, to be prepared just in case the US stock start to fall and the Chinese stock would not be too much influence. So my projection is that it would fall at first with the US and then rebound. So I see many questions are related to this. I hope this answers several questions at the same time. What's the next growing potential sectors? I've just addressed that, and no doubt EV, new energy, solar are no-brainers. On top of that, you can also look at the ones I mentioned before: smart health, smart logistics, smart agriculture, chip sector. And for now, I think it's good to focus on the long oversold fang of China. The list I just gave out. Tesla, Elon is selling his stock. Does that mean Tesla is gonna fall? After it broke out to make all-time high, I made a target for Tesla to reach 1300, and now we're getting close. I think we need to watch out for it getting into greed and euphoria stage, so a correction might happen. So even ARK Invest has been selling Tesla too. It's just normal because it has reached a certain stage, but in the long term, Tesla should be still up and running. So depends on whether you are a long-term or short-term investor for Tesla. And what's your overall cost? For short-term trading, I would take profit when it's around 1300. And for long-term, I think it's just simple buy and hold. What's the idea on Tencent? I should have it covered just now. It's like the Apple for Chinese stocks, so just buy at every dip. I don't think it will be over because of the regulation. And for Peloton, we know it's a stay-at-home stock, and we should have this expectation that it will get into a correction when lives start to get more normal. So this should happen sooner or later. Now I think we should just wait for it to consolidate and find the bottom first. But overall, the company is still young, and I don't think the growth is over. And regarding to the newest comments Cathy Wood gave to Chinese stocks, she thinks China is playing with fire with Evergrande, and I just share my view on that. I think as long as they're doing it purposely, they seem to be planning things that we don't know. And at this point, if you're holding Chinese stocks, you have to have belief and conviction. That is the only way. I don't see any other ways. Thoughts about DIDI? It's a risky stock, government might punish it more, but the bad news might subside, and I think they have consolidated at the bottom. And I have to say, I kind of agree. This is why I gave a list of stock to buy last month in October, and my buying price was 7.8. On Friday, it had reached the lowest of 7.9, so my order did not go through. I held it all the way from 8 to almost 10 and coming back down to 7.9, and it is getting so close. I think DIDI would not be the same DIDI as before, with 90% of the market share in the sector, but it doesn't mean the growth story is finished. After all, they are collaborating with BYD to make smarter share ride transportation. I think they should focus on that. So I hope I had most frequent asked questions covered. Let me know what I have missed, or I might do individual stocks sharing more, because that's what I would be more interested in and have more passion in. Now, if you have enjoyed this video, please give me a big like and write me a great comment, and I'll see you in my next video. That's it, guys. Hope you can find my videos helpful. Make sure you subscribe to my channel and give me a big like. Thank you.